obviously, as a broker and as a market maker, the memorable times are the 2007, 2008, 2009, when the markets were going absolutely ballistic, and every day was, sometimes we'd be £500,000 down, and the next day you'd be £800,000 up. Yeah, it was absolutely mental. It was great fun. Everybody seemed to have lots of money, and London Capital Group was the broker of choice at the time. So, capital spreads, that is. It was great fun. From the point of view of clients, though, I had one or two clients who did exceptionally well, who were just, sometimes lucky, you could say, or just very good. I had one client who turned £4,000 into 270,000 or something, some huge amount of money, and he stopped and took the money out, probably paid off his mortgage or something. And when he was a telecoms engineer from Brentwood, But that's the exception. And I was quite impressed. He took his money out and just left. Another one was a lady who opened an account with a small amount of money, and I don't know what she did, but she put an order to buy Google, and what we didn't know then, basically, it just went into the book. The order went in there, and then it was triggered. Obviously, it was triggered a few days later, but then 2 years later, a year and a half later, she rang up the customer support desk and said, "Oh, I've logged into my account. I think there's a bit of a mistake on my account, and it's showing £20,000 profit." So the customer support girl's going, "Oh, obviously somebody's put a trade in wrong." 'Cause often when you manually input trades, somebody offsets a number, and so so thank you for ringing. Anyway, she looks at the account and says, "Well, you left an order 2 years ago to buy Google, £1 a point. It's now $200 higher, so it's £20,000. She'd only had like 100 quid on the account or something, and 200 quid on the account. She just left the order. It hadn't been filled on the first day, and she just left it. And she was just a housewife from Birmingham. Took the money. Apparently, it was the happiest phone conversation that customer service girl had ever had. So there are nice stories, but then of course there are downers as well, where people have lost a lot of money that they couldn't really afford to lose. And so you should always only play with money that it doesn't. There's never money that doesn't matter, but there is money that does matter. So don't play with your mortgage money or your pension or something like that. There are good times and bad, but mainly good.
Just on some of the, how do traders react on some of those big loss days?
How do traders react? I mean, London Capital Group we didn't really talk to our clients at all, because it was the company policy not to. In general, people take it on the chin. Okay, I've lost the money. Some say that's enough. I'm stopping. Some just say, okay, refinance the account and off you go again. I don't think there's a general way for people to react. I think people do genuinely know there's nothing to do with the spread betting company. It's just the market. You're not, even though the spread betting company is on the other side of you, or the CFD company is on the other side to your trade, you're not actually fighting against them. You're fighting against the market. And it's silly to get wound up by your spread betting company, because they're not doing anything wrong. They're just quoting the price from the market. So always bear that in mind. Losses are losses. Everybody has them. If you never had a loss, then you're not a trader. So,
do you think history repeats itself? Is that a generalised thing?
Well, for my trading, yeah, it does all the time. History repeats itself over and over again for individual clients. It repeats itself over and over again for individual markets. But because, of course, it does. The markets can only ever do two things. They can only ever go up or down. I suppose they could stay the same, but that wouldn't make a very good story. There's only two things they can do. So they repeat patterns over and over and over again. The only problem is you only can really see the pattern after it's happened. You can try to to get ahead of a pattern, but then it suddenly turns into a different sort of pattern just as you get in there. So it's always very difficult. But when you look at in history, you know, when you go back 20, 30, 40 years and you look at it, you say, God, look at that. That did exactly the same thing, did exactly the same thing. But as I say, you can only really see it afterwards.